Hey everyone, it's your favorite real estate agent in Las Vegas, Robert Steim, Keller Williams Realty, the Marketplace, Steim Realty Network. Hey, wanted to touch base with you guys about this last week's numbers and see how they compare to the last week's numbers that we went over. So for March 30th, we are looking at single family residences again, and our current active inventory is now 4,131 properties. And this is now down from the number last week was 4,315. So we've dropped about 4% in the past week. So available inventory, options for buyers is shrinking. Competition for sellers is shrinking. So those are a couple things to keep in mind. And then the date that we were keeping an eye on from last time was November 9th as a reference. 8,223 properties was kind of the latest peak. And we're down almost a full 50% now. So if you're really keeping an eye on that trend over the holidays, the number of homes on the market just kept dropping, and that trend just keeps continuing. So we're kind of waiting for that to reverse, maybe with the spring market and people coming on the market ready to sell. So we'll see what happens. And then as far as the average sales price goes, it's actually decreased from 545 and some change down to 522 and some change. So that's down over 4%. However, if you remember the average sales price, we try not to put too much focus on, because those are the ones where, you could have a $20 million home or a $10 million home that sold that week, and that drives that average up. So I think we were up 5% last week, which was a big jump up, and now we kind of corrected and came back down that 4%. So that kind of makes sense. And as far as the median sales price, which is the number I pay a little bit more attention to, the median is that, they take all the numbers, all the sales together, and they don't necessarily care like what the highest and the lowest is. They kind of just find that middle and what's that number like. So to me, that's a better representation of the market. So that actually increased from 424,000 and some change up to 430,000. So up more than 1.3%. Again, a week to week comparison, not the end of the world to, make a final decision or anything like that. But it's a good indication of keeping an eye on a trend. We'll see a monthly idea when we run our monthly numbers here at the end of the month, and we'll report that. That'll be a little bit more meaningful to me because a full month's data versus week to week. But other things we're keeping an eye on is the notice of defaults. This continues to rise. So we had 36 new filings this past week. So that brings the grand total to 536 new filings over the past 13 weeks. So as that is a sign of people falling behind on their mortgages for whatever reason, maybe a precursor to banks having some inventory down the road for foreclosures. So it's not out of control or anything, but we'll keep an eye on that. Let's see, average days on the market has remained steady. So we were at 52 days on average last week, and we were at 52 days on the market this week also. What I'm seeing is the homes that are in good condition and are appealing and priced right, they're selling really quick. I mean, in days. But then you've also got the homes that maybe need a little bit of work, or they're overpriced and the sellers aren't super motivated. It's just not getting attention for one reason or another. Those are maybe on the market for several months, and we're finding that average to be about 52 days. As far as the total inventory goes versus the number of sales, this is a new stat we're going to track, is the amount of inventory and how long it will last. So we had 4,131 properties on the market this past week, and we had 465 total sales. So if we divide that 4,131 by 465, that shows us that we've got roughly 9 weeks worth of inventory. And most people would consider 6 months as the kind of even balanced point of the market. So anything over 6 months is typically considered a buyer's market, because there's enough inventory out there that sellers are having to do creative things to get the buyer's attention. The buyers can, take their time, shop around a little bit, maybe negotiate a little bit harder because of the amount of inventory that's out there, the supply and demand dynamic there. Under 6 months is typically considered a seller's market, where the sellers are calling the shots. The sellers are asking and getting what they want, and buyers are having to bid a little bit more aggressively because of the lack of inventory. So what's made this market a little bit strange is, we're just over 2 months of inventory. So technically a seller's market and a pretty strong seller's market. However, we're seeing in circumstances where sellers are still helping out with buyers' closing costs in some cases, and buyers kind of feel like they have the upper hand in some ways with the higher interest rate. And sometimes it feels like the homes are sitting on the market a little bit longer, but it's really case by case. So I would encourage you guys, if you're in the market right now, if you're a seller, don't get too big of an ego about the whole inventory thing. Stage your house properly, price it correctly. You'll get attention, because if you miss that mark, you're really just going to get overlooked and spend some time on the market. But from a buyer's perspective, don't feel super desperate on things. However, if you see a house that you like and it's staged well and it's priced well, you're probably not going to be the only one. So you might run into multiple offers, and you might not be able to ask for certain concessions during negotiation. So everything's case by case. So keep all that stuff in mind. And then this hasn't really changed. Just the key factors driving the real estate market, things I'm keeping a close eye on, is the higher interest rates. They're still hovering pretty high, and the inventory shrinking. So when we're talking about the interest rates being high, that tends to put pressure for the housing market and prices to come down. However, on the flip side, if the inventory is shrinking, that usually drives the prices up. So we've got these two things playing against each other. They're button heads, and prices have stayed pretty steady at this point. But if interest rates show signs of dropping, then kind of expect people to get off the fence and start buying. If the inventory starts to accumulate quickly, then we could see a little bit of pressure on the prices coming down, and sellers getting even more motivated if that's the case. But higher payments versus supply and demand, just kind of the story of this year so far, and stuff we'll be keeping an eye on. If I notice any changes, I will be sure to report back. And that's what we've got this week. So I appreciate you guys stopping by. If you like this content, please drop a comment if you have any questions that I'm not addressing or things that you would like to see. And subscribe, like, all that fun stuff. Help me out, and we'll keep coming. So thanks so much for stopping by. Have a good day.